Welcome to Bunnex Investment Group. This is video number 2 of the small account trading series. If you haven't watched the first one, consider doing so to fully understand all the concepts that we are trying to put across. So if you're new, consider subscribing so that you won't miss any new content. So in the previous video, we talked about what is considered to be a small trading account, then overcoming small profit psychology. Then the third thing was the small account compounding principle, where we talked about the principle of adding a profit to the right size, then withdrawing from a small account. So in this video, we are going to be talking about the small account trading system definition. We are going to give you a paraphrased passage on what this system will be looking at, then the trading system itself, and last but not least, the entry and exit criteria. So if you want to understand everything, be sure to stay, where we will give you chart examples on real markets. So the first thing, or the first topic that we are going to be talking about, is small account trading system definition. So what is this system? So a small account cannot sustain a long series of losses, otherwise it may be easily blown out. So if you have a small account and incur probably 5-6 losses in a row without proper risk management, you can easily blow it out. Therefore, the trading strategy we will try to have consecutive wins so as to accommodate the compounding style we talked about in the first video. So the system will look to place the stop loss at a maximum of 20 pips and double the target. And basing on backtesting data, the system may have 2 losses in a row at some point. So since the market is uncertain and several conditions may actually put in different factors to increase this figure. So basically the trading system is going to have our time frame of observation is going to be M15 time frame, and the indicators that we'll be using are the 13 and the 50 EMA. Let's see how they are put on the charts. So basically we are going to be looking at the M15 time frame, as I've said earlier, and the indicators that we are going to be using are the exponential moving average applied to close, as well as the 50 exponential moving average applied to close as well. After being put on the charts, in my case, the one in red is the 13 EMA and the one in blue is the 50 EMA. So the first thing that we need to see, all these in green, are the steps. So step 1 is to see these 2 EMAs giving us a crossover, actually signifying that momentum shift is now in the direction of the crossover. Then it's not a point of entry, but it's a point of signifying the next shift of momentum. In this case, the market actually went up as signified by the EMAs. Then later, you can see the market coming back to the 50 EMA. So we need a touch of the 50 EMA. A touch, sometimes the case will be like this, whereby there is no candlestick touch of the 50 EMA. So in this case, a touch is actually required. This is step 2, which is basically a 50 EMA touch by price. Then third step will be basically candle closure above the 13 EMA from the 50 EMA touch, like that. After candlestick closure above the 13 EMA, we now wait for the candle. Actually, after closure of the candlestick above the 13 EMA, we enter right away. Our stop loss should be put below the structure, like in this case. That is where we were saying the target will now be derived from double this distance. So in this case, probably around this point. So let's have more examples on the charts. So the first or the other thing that we need to highlight is all your trades that you are going to be taking with this strategy should be taken within the US and the London session. I strongly don't recommend trading within the Asian session, because usually it's actually a session used to accumulate contracts. So in this case, this is March 3, 2022, and after a crossover that I've signified with this arrow, we can see 1350 made a crossover. After that, the price actually went down and went back up to retest the 50 EMA. So at candle closure below the 50, that is where we made our entry, and this was a 2:1 reward to risk ratio, right? So another example, let's go on GBP USD, and we are just looking at the examples that actually took place in March. By the time of recording this video, it's still early March, which is 4 March 2022. So this was 1 March 2022. After that, I've signified the crossover with this arrow pointing at the crossover. The market went down like this, and it came back to touch the 50 EMA. After touching that 50 EMA candle closure below the 13, we can see the market went to hit our target, right? After that, we can see that we had another crossover here on the following day, and the trade actually occurred in the London session this time, in the US session, sorry. So in that US session, we had a crossover, price went up and came back to retest the 50 EMA. After retesting, we can see the market actually giving us a candle closure above the 13 EMA, and our entry was actually met. Then here, this trade also took place around the US session period, and I've also signified with this crossover with this arrow, and the market went down and came back to the 50 EMA, and candle closure below 13 actually gave us this move. So right now the market is actually live and is at this point. What we'll be expecting, we only trade when we see a 1350 EMA crossover. Without that, there is no entry. So in this case, we will be waiting to probably see the market give us an upward shift with an EMA crossover. After that EMA crossover, a bounce on the 50, and then entry towards the upside. So basically, that is a very simple strategy that can allow us to grow our small accounts using the compounding theory that we talked in video 1. You'll be actually able to spin it up and flip it to higher amounts. So that was it for this second lecture. In the next lecture, we are going to be talking about Forex pairs for small accounts, the only pairs that you need to focus on, and the number of pairs that you will be focusing on. Thank you, and see you on the next one.